Join me as I dive into the Dow Jones stock markets and try to figure out what's really happening right now. The Dow Jones is often considered the pulse of the financial world, and for good reason. As one of the most widely followed stock market indices, it's a bellwether for the overall health of the global economy. And with so many investors and businesses tied to its performance, it's no wonder that everyone from Wall Street insiders to Main Street participants are keenly interested in its every move. We're living in unprecedented times, and the Dow Jones is reflecting that uncertainty. Inflation rates are on the rise, major economies are flashing warning signs, and geopolitical tensions are running hot. And all of this is having a profound impact on the stock market. Take, for example, the recent surge in commodity prices. As countries around the world struggle to keep up with rising demand, the cost of everything from oil to wheat is going through the roof. That's putting pressure on already strained supply chains and sending shockwaves through the global economy. And at the same time, central banks are grappling with the delicate task of raising interest rates without choking off growth. Meanwhile, investors are increasingly nervous about the prospects for global trade. With tariffs and trade wars dominating the headlines, the outlook for international commerce is looking more uncertain by the day. And that's having a direct impact on the Dow Jones, as investors try to make sense of the rapidly shifting landscape. As if all that weren't enough, the tech sector is going through a period of unprecedented turbulence. With giants like Facebook and Amazon facing intense scrutiny from regulators and lawmakers, the future of the industry is looking more uncertain than ever, and that's sending ripples through the entire stock market as investors try to adjust to the new normal. But what's really driving the fluctuations in the Dow Jones right now? To get to the bottom of that question, I turn to some of the top experts in the field, and what they're telling me is that it's all about the bond market, specifically the yield curve, which has been flashing some worrying signs in recent months. According to the experts, the flattening of the yield curve is a classic indicator of a slowing economy. And that's exactly what we're seeing right now, as growth rates slow and inflation ticks up. But what's really interesting is that this trend is playing out in real time, with bond yields moving swiftly in response to every new development. One of the most fascinating aspects of this trend is the way it's intersecting with the world of cryptocurrency. As investors seek safe havens from the turmoil in traditional markets, crypto is looking more and more attractive, and that's driving up prices, even as the underlying technology continues to evolve at breakneck speed. But the most significant insight to emerge from all of this is the sheer scale of the shift that's taking place. We're not just talking about a minor correction or a brief downturn. We're talking about a fundamental transformation of the global economy. And that's going to have far-reaching implications for everyone from institutional investors to individual savers. So what does it all mean? In a nutshell, the Dow Jones is reflecting the deep-seated uncertainty that's gripping the global economy right now. And as we move forward, it's going to be more important than ever to stay on top of these trends and adjust our strategies accordingly. Thanks for watching, and don't forget to leave your thoughts in the comments below. If you're new here, consider subscribing for more content about most important news.